If you're thinking about buying a home, finding out that interest rates are now at the highest point that they've been in almost 2 years may come as a bit of a shock, but the truth is it wasn't entirely unexpected. So that's what we're going to talk about in today's video. Stick around. If we haven't met yet, I'm Melanie VanBuskirk, and I'm glad you're here with me today to talk about interest rates. Experts have been calling for rates to rise in their 2022 predictions, and the forecast is now becoming a reality. The projections from Freddie Mac for this year show rates for quarter 1 of 2022 at 3.4%, quarter 2 at 3.5%, quarter 3 at 3.6%, and quarter 4 at 3.7%. As the numbers show, this jump in rates is in line with the expectations from Freddie Mac. And what they also indicate is that mortgage rates are projected to continue climbing throughout the year. But should you be worried about rising mortgage rates? What does that really mean for you? As rates increase even modestly, they do impact your monthly mortgage payment and the overall affordability that you have. So if you're looking to buy a home, rising mortgage rates should be an incentive to act sooner rather than later. If you want a breakdown of how interest rates impact your monthly payment and the amount you pay over the life of the loan, check out this video. The good news is, even though rates are climbing, they're still really worth taking advantage of. Historical data shows that today's rate, even at 3.45%, is still well below the average for each of the last 5 decades. In the 1970s, the average rates were 8.86%. In the 80s, you would have been looking at a real whopper, 12.7%. And in the 90s, they dropped down to 8.12%. In the 2000s, when I moved to Shreveport and I bought my house, rates were at 6.27%. Lastly, in the 2010s, the rates were 4.09%. So let's take a purchase scenario of buying a home for $200,000. We're putting down 3.5% on a 30-year fixed mortgage. With today's interest rate, we'll use 3.5%. Our monthly payment, not including property tax and insurance, is going to be $861. If we take the same scenario and use the highest interest rate, the rate from the 80s, that 12.7%, that payment would have been $2,090. So you can clearly see how the rate affects your affordability and ultimately the home that you're going to be able to buy. You still have a great opportunity to buy now with a rate that's better than what you may have paid in decades past. So if you buy a home while rates are in the mid-3s, your monthly mortgage payment will be locked in at that rate for the life of the loan. As we saw from looking back at where interest rates have been in the past, a lot can change in that 30-year time frame. Buying now is a great way to protect yourself from rising costs and future rate increases while also securing your payment amount for the long term. The bottom line is mortgage rates are increasing and they're forecast to be even higher by the end of 2022. So if you're planning to buy this year, acting soon may be your most affordable option. If you enjoyed this video and want to stay informed about all things related to buying and selling homes, be sure to subscribe to my channel and turn on notifications so you don't miss any of my upcoming videos. And while you're here, check out my playlists. All right, I'll see you on the next video. Bye.